The following is a presentation of TFNN. Live at TFNN, the Money Masters.
Let's go to Shivan in Boston. Shivan, what's happening, brother?
I'm watching you both on Tiger TV.
That's a beautiful thing.
Yeah, definitely it is. Learning a lot from Tiger.
Now, your Money Masters, Tom O'Brien and Steve Rhodes.
Welcome, folks. Steve Rhodes, Tom O'Brien. Appreciate all you Tigers and Tigresses growling and prowling with us out here. Right now, we got the Dow down 45, Nasdaq off 20, S&Ps are off 10. We get gold down 11 bucks. DAX and the UK, they're getting us smoked out here this morning. Oil only down 50 cents. Oil's down $9, 9% actually in 3 days.
Yes.
Bonds are up a point, and guess what?
Tell me, baby.
King Dollar
King
woke
Dollar.
up. King Dollar woke up, folks. King Dollar's up 52 ticks at 79.65. The Euro's down $1.10 at 129.38.
You know what King Dollar just ran into? It just got ambushed by Mario. By Super Mario.
By Super Mario.
Yeah,
I love it.
Yeah, it just was. Super Mario was waiting in the weeds.
Well,
me, Mario.
I love it. Yeah, you know, hey, listen, man. Super Mario's going to need a lot more firepower. There's no doubt about it. The Shanghai last night.
That was bad news.
Shanghai,
yeah.
Folks, took out the lows. Shanghai is on its way to 1,600. Okay, it's just amazing. I mean, it's. Let me tell you so the correlation. Remember, we brought up the chart. The correlation with the. I know what I wanted to do. I was doing this yesterday morning.
Yeah, I heard you talking. Yeah. So I was trying to bring a couple of those charts here.
Okay,
because
so
they were on my other system, so I just got to find them.
Yeah,
but
well, that's all right. We can just bring. You can bring that up on your side. What we're going to do, folks, is this. I want to bring up.
I want to look at oil.
I want to look at oil, and I'm going to make it the correlation. Well, what we'll do is this. We'll swap back and forth on these charts, but what you're going to see. I want to put the correlation. See, oil is taking a smoking, and I want to see I know the correlation on the S&P. The thing that was weird about it when I brought it up is that it was the same correlation of the Shanghai with our markets, but Shanghai and our markets disconnected last August.
They did, absolutely,
okay?
That's right.
But they all connected up in 2001, the beginning of the commodity bull market.
Okay.
That's when the connection started.
Yeah.
So it's like, okay, so what I'm going to do is I want to put the correlation. I'm going to put the correlation with the oil and the S&P, and you can give me the dates.
Actually, I've got it right here.
Okay, is that a monthly or what is it?
Well, this is a weekly chart.
I'll put a weekly there.
So I put a weekly chart. That's right. So this is the weekly chart. And
I'll put a weekly.
This is what this has is a couple of things on here. It's got the QE dates, okay, and when they occurred during the week.
Okay.
And then it also has the correlation of the S&P on it.
Okay.
Is that what you got the S&P on yours? Or
I got the S&P and oil.
Okay.
Because that's
the S&P and oil.
That's see the turn on oil. When you look at the turn on oil, so the S&P and oil traded together. Just like if you remember, the craziest thing about the gold market was that when we first were getting into gold, okay, the correlation was that technically, it was bottom, and it's 282, and it's like, okay, man, it's the best deal in the world.
Yes.
But the last thing I thought of that was really going to happen is that gold's going up and the market's going up.
Right, okay.
It's a direct correlation.
Yeah.
Absolutely direct.
Yes,
okay?
yes.
So that was really wild watching. Now, when I looked at the oil, but it made sense after it got going a while, I realized that, okay, hold it. You get the small caps.
Yes.
What had happened, actually, they were some of these golds were even micro caps, and then they got accelerated up, right?
Yes.
So when you do look at the highs, okay, of 2007, oil cracked first.
Okay.
So it's like, the oil topped out, folks, in October, and, our markets topped out in July.
Yeah.
Okay?
Right. But October of 2007.
Yeah.
Right.
But the correlation is there.
Yeah.
So it's like I was looking
Whereas our markets topped out July 2008.
That's right.
Yeah.
Exactly.
Yeah.
So now what I want to look at, though, is this. Is that coming of your QEs,
So
right?
on the QE, QE1, behaved really the same way, with regard to the market. QE2 put in a low.
Right.
So the QE2 was August 27, 2010, and that certainly was a low out there.
Right.
Got tested, but it didn't get tested until Operation Twist came into play.
Okay.
Operation Twist was September 21st, 2011.
Okay.
That went ahead and put in a low as well, and the market moved up. Now, QE3 has been a total different situation right now. So QE3, that's the top.
Right.
So that was a top last week. That was the high of 100.42. And it's been trading off ever since.
Oh, interesting. Oh man, look at this. I see what you're saying.
Yeah.
So when the QE1 and 2 come out, we were at
lows.
We're at least at retracements versus being higher. Right.
That's right. Yeah. And I had gotten a call from someone. I think it might have been while I was doing your show.
Okay.
Somebody else drove off the road too, but he but he called. No, actually, I think it was the next morning. It might have been yesterday morning.
Okay.
And he was noticing that as well. He said, "Hey, the other QEs, at least the market had pulled back."
Right.
So in this case here,
with
the market move. So now that is the correlation with regard to oil. So we got to take a look at let's say one commodity at a time in order to try to compare things, because now, if I switch over to gold out here, and we were taking a look at that, so I want to bring that back up.
Yeah.
And if we take a look at QE1, absolutely was a low that was put in. It ended up being put in the following week, November 25th, or maybe even the prior week, November 25th, 2008. QE2, the same thing, and QE3 right now also the same thing. And in this case here, what is interesting about these quantitative easings is that it just shows you the importance really of this trend line. This longer-term trend line that had been in place. And you had gold trade outside of it. You had, and this is the weekly chart that we're looking at, but what you had was you had that death cross, the 50-day, in this case here, 10-week move through the 40-week. Put it in long-term bearish mode.
Right.
But it also broke that trend line, but now you're back up into it. And so in this case here, where oil has cracked, certainly, and it's a weekly chart too, so we won't know till the end of the week. Right. So we've got still a couple more trading sessions.
Right.
Silver, same thing. So if we take a look at hi-ho silver out here, what you can see is that QE1, and silver actually, when I did, I was listening to the show last night, and I heard you say, hey, tomorrow here's what we're going to do. So I said, okay, I need to make sure I bring in my other charts off of my my laptop, because I had and so I was looking at QE2 and QE1 on the trend line. I was like, oh my God.
That's amazing.
Yeah. And
so if you're in your car right now, folks, what we're looking at is this. Steve has a trend line that's going back to 2009. And what you have is that QEs are down at the bottom of the trend line.
Yeah.
Now, QE3 was down at the bottom of this trend line for silver.
It danced along that trend line. I kept looking at it on gold, but wasn't looking at the weekly on silver.
Okay.
And then when I put this up, I was just kind of like knocking myself in the head.
Yeah, right.
Because we'd seen that, silver actually had even gone into a long-term bearish mode. Again, just take a look at the lagging indicators, the exponential, moving averages, but still went into a long-term bearish mode in November 2011.
Right.
But where it came down to was that darn trend line.
That's amazing. That really is. No, I'm with
it's
you.
like, and with as we were talking yesterday, with really narrow candles out there.
Low volume. No, there's no doubt. There's no doubt.
So
pretty cool.
And quite frankly, yesterday you had the golden cross. So you actually have silver now moving into a long-term bullish market again. At least until that's broken.
Right.
And if you take a look at even gold and silver today, because you got to admit, King Dollar was on the move this morning.
Yeah.
Truly on the move this morning, and yet gold and silver really weren't doing a whole lot.
No, it wasn't. Not percentage-wise, because you got to remember, you're at higher numbers now, folks. So, it was down $12, but $12 is nothing.
Exactly.
That's a tier,
Yeah. So they're really cool charts, and taking a look at those, and taking a look at those correlations, and just simply, making sure that you can use these, folks. You can do these same types of things on any charts that you trade.
Right.
And it really is the reason why, oftentimes when we're trading, we just take a look at whatever time frame it is you're trading on, which you should do. But you always need to go up one or two. I say go up 2 levels, and go down 2 levels to see what's going on inside. Marshall in the den, I think earlier, he said, "Hey, what's your take on what's going on with the Queen this morning?" And so I kept going down to a couple of charts, and this is why I said, "Hey, I think I know where Mario's hanging out. He's in the bushes out here."
Yeah,
okay?
Right.
Because it was coming down into 3 great retracement numbers, Fibonacci numbers.
Unbelievable.
Between swing points. Right. So I said, okay, there's where Super Mario's hanging out. And if it busts this area here, I guess he's out fly fishing because he didn't get to go fly fishing when he was in Montana.
I love it.
It's me, Mario.
I love it. No doubt. Let's take a look at some of the high volume stocks and a low volume market out here. We have, you got BAC down 11 cents. You got Facebook off 50 cents. Let's see. J.C. Penney's down $2. That's getting hit. Freeport McMoran's down $1. Tulia. This is an IPO, so this is the real estate site.
Okay.
This went IPO this morning. It looks like it's up $5, but I'm sure it just opened up like that.
Okay.
Well, I'm not sure. They're saying it. Yeah, no, it opened up.
And what do they do? So they're a real estate site, and what's are they making their monies off of? It's advertising.
It's advertising. Okay. Yeah. And if you haven't used it, folks, it's an unbelievable site. Okay. It's the way it's set up is this, okay, is that you can scan, okay, what the internet has allowed to do, and I mean not every sector, but just in the real estate sector, it's insane.
Yeah.
Okay, because what ends up happening, folk, you can organize and you can go through street by street and house by house, and really get to understand what's going on. And the way Tulio works is that you can do broad neighborhoods at the same time.
Okay.
You can see what's out there, number one, and you can see what's coming on board.
Okay.
Okay. Now, when I say what's coming on board, what they depending what part of the country you are, what they have down pretty good, okay, but not real good, not great, is that you can get pre-foreclosures, foreclosures, bank owned, okay. But what I've definitely noticed is that when we do it, we're right at the courthouse. So what ends up happening is I'm taking the courthouse records versus Tulia records. But what does happen is that you can grab the bigger basket off Tulia first, right?
Okay.
And then match it with the spreadsheets that we have. Do you know what I mean?
Yeah.
And then we throw out the other ones that just aren't there. Do you know what I mean? Because that's how we're using it. But it gives you a good idea.
And it's a better site than Zillow? For at least the type of work that you're doing, or you really use that as well,
We're
right?
using that as well, too.
Yeah.
What does happen is that the pre-foreclosures, Tulia picks up the folks not paying their mortgage quicker.
It does, okay.
Yeah.
Okay.
It's the initial les pendants. That's the first paper.
Okay.
Tulia picks it up quicker than Zillow does.
Okay.
Yeah, than Zillow does. Okay.
Yeah.
So but there's a lot of dynamite information there. And
they're online today. They're certainly not having an impact on Zillow's stock here. Just trading that really out near where it closed yesterday.
For real estate agents, it's a no-brainer.
Yeah.
Do you know what I mean? Advertising on there. A house comes up, real estate agents right beside it.
Okay.
Yeah, with the phone number. Do you know what I mean?
Oh.
Steve Rhodes, Tom O'Brien. You stay right there, folks. We're coming right back.
Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her small cap roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, David White, Larry Pesavento, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, folks. 877-927-6648. We have, let's see, Honeywell's down $1. We got Big Blue. Big Blue's down 40 cents. You got Ma Bell up 21. Caterpillar's off 235. See, this is the continuation. Let me go over to Caterpillar for a second, because the larger, yeah, well, it's not bad. It's only down. There's not a huge amount of volume there, but a Caterpillar itself, folks, okay, is way off its highs. You know, you're talking, $1.16, and then she wants to make it down. She wants to make it down to that $77 area. You know, she's hanging out down there. So yeah, that's going to be interesting to see, you know, exactly how it makes the run down to that area.
You know, when the market came, when the market opened up, Nippon Telegraph, NTT, one of the Japanese phone company out there, yes, had gapped up. So this thing here, and I don't know what it looks like over in Japan. Okay. You know, but it's taking on a B point, gapping up over a B point. That had 373,000, and it's already done 314,000 so far today. I remember looking at, when we were taking a look at the Japanese market possibly bottoming out, and the euro and so forth. I remember going through a whole list of stocks, and this happened to be one of them out there. And so this thing has had a pretty good move probably since I was originally looking at it. But
9432.
But I'm just curious what it's actually doing over in Japan.
JP Equity. So you got to remember, folks, in Asia, all the stocks are numbers. Here we are. Okay.
Oh, man, look at that. So, that really does have what's behind that?
We just pulled this up. So it's 3,855 yen. Took out a B point, took it out with volume. The B point is 3,800 yen. A point is 32, so let's say 600 yen gets you 4,100. Okay, so it's an ABC up to 4,100 yen.
Yeah, and dollar-wise, this wants to go to $26.
Yeah.
And is there any news or anything behind because it got major volume in there.
Let's see. They're buying back shares.
Oh, is that what it is?
Yeah.
Okay. So that was all right. Those games.
Yeah, seriously, man. I was looking yesterday. So check this out. The drug industry, right?
Yeah.
CVS, okay? CVS is trading out of 47.91, okay? Now, if we bring this up, if you want to see something that's going to be really wild, and watch how this shakes out, folks, I'm going to put this on. Let's put it in a 3-year, weekly, okay?
Yeah.
Now, what you had with CVS is this. Let me put it on I'll put it on a 10-year monthly. What you have with CVS is this, is that you got over the highs of $44, which is 08, okay?
Yes.
And you got over it, folks, with absolutely no volume.
Yes.
Okay? Now, as soon as you got over it, what ends up happening? It comes back inside the range.
Yeah.
Goes back outside of the range again, right? Now, CVS has taken $6 billion, and they're going to buy this stock.
And when it's at their highs.
Yeah.
When it's at highs, going back 10 years.
Yeah. Okay. Is that sick or what?
No, it is.
Now the way this is what flips people out so much, folks. And well, let's put it this way: most people don't understand this, but the shame is that that's why there's still more people coming out of the stock market. And what it has to do with is that if we did enough digging in here, what you're going to see is that they know that things are slowing down.
Yes.
Okay. And the executives have huge amounts of stock awards.
Yeah.
And they got to get out. And the easiest way to get out, could you imagine? Easiest way to get out. Hey, boys and girls, let's put some money behind this move.
Yeah.
We gotta get out of town here, man. Yeah. We gotta make sure we get enough time to get out of town.
Oh my goodness.
I know. No, it's pretty intense, man. But when you see $6 billion at highs, after, if we just go back to the daily for a second, what you're going to see is that the thing gapped down from $48. Down to 45, and we came down with 35 million shares, and it just went back up, folks, at 9.
Yeah.
It's just amazing. It really is. There's no doubt about it. Let's go look at that gold contract. So gold had, last few days we've had some nice volatility. Same thing. It's still an inside day.
Yeah.
It hasn't done anything.
No, it really,
No.
That's why, I was taking a look at I got up early this morning and was looking at the King moving, the euro pulling back, and immediately looked at gold and silver, and I was like, huh.
Yeah.
Interesting.
It's not Apple. If we go over to Apple, that's a light pullback, $6, but tell me, 4 million shares, Apple's going to need a lot more than that on the way back down.
Yeah.
Now, the housing stocks.
Yeah, okay.
You want to talk some money? I'm telling you, man. Folks, it's just amazing. If you go to Toll Brothers, they're extended right now, but bottom line is that there's big money out there.
Yeah, and the question is, like on Toll Brothers, is it going to pull back to that high volume day?
I know. Well, you know what? On a basis,
we know it should.
It's gonna.
Yeah.
The question is, when's it gonna?
That's right.
Steve Rhodes, Tom O'Brien, all you Tigers and Tigresses, you stay right there, folks. We'll come right back.
You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. If you're a trader thirsty for knowledge, then we have the perfect event for you. Tom O'Brien will be hosting a live 4-hour dynamic trading strategies workshop on September 29th in the Tampa area. This one-of-a-kind workshop takes place from 8 a.m. till noon and is completely free. We'll even be giving away almost $2,000 in door prizes randomly drawn from those that attend live. Along with diagnostic trading expert Daryl Martin, Tom O'Brien will teach you how to identify and set up your trades using dynamic trading strategies, and Daryl Martin will teach you his diagnostic trading formula, including the strategy, system, and style that gives you an edge in this market. For more information and to reserve your spot today for the September 29th free Dynamic Trading Strategies Workshop in Tampa, please visit the front page of TFNN.com. Don't wait to act as space is limited. Sign up today. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Welcome back, folks. Steve Rhodes, Tom O'Brien. Appreciate you. Tigers and Tigresses growling and prowling with us out here. Folks, if you do have an interest in real estate, come over to our website at TFNN. And what you're going to see right in the breaking news, I did a paper about the real estate in Pinellas County. We opened a fund. It's Tiger Real Estate Investment Fund. But whether you're interested in coming into the fund or not, read the paper, because the paper will tell you what's going on around here. But particularly what you're going to see a lot of those charts about what is happening money-wise in the whole United States. Now, as you're over there, right, on you get the real estate paper, and then Steve just wrote a paper on candlesticks, okay?
Yeah.
They're both right there. You know, hit those print buttons. You're off to the races.
Yeah, and just great information and good education, and
totally.
and a little bit of fun along the way.
Oh, a lot of fun, man. I had a meeting yesterday with a few people in my office, and the first thing I did, not the first thing, but a half hour into the meeting, I says, "Come here." I says, "I want to bring this up and
see the image, see what you see."
It was good.
Yeah, that's good.
We were talking a couple of different things, but I says, "Look at this." I said, because we were talking about perception. I says, "Well, look at this."
That's
Isn't
right.
that cool?
Yeah, I love it. I love it.
Let's go to Larry in Miami. Hey, Larry, what's going on?
Tom, I own a anti-obesity drug stock called Arena Pharmaceutical. It was approved by the FDA 2 months ago. They're going to start marketing it in January.
Okay.
I own it at $8.20. It's selling around $9. Can you give me a take, please?
So let's take a look at Arena Pharmaceutical. You get a biotech. The low is $1.23. The high is $13.50. Okay, so...
Also has a big short interest, I understand.
Okay, so let's see what that is. Wow! Holy cow! You get that. Oh man, if you can squeeze those shots, Larry, you're gonna make a fortune. There's 20% short position in this, folks.
Oh boy!
Oh yeah.
On a $9 stock.
On a $9 stock, which is insanity.
Yeah.
Well, listen. What I like right off the bat is you have a high volume high. Okay, so that means it's gonna go get tested. $13.50. That's the bullish pot. The bearish pot is like, oh man, you get that gap that's open to $3.89. Let me just bring this back a little bit more. And now let's see. It's still set up right. I mean, what I would just make sure of, Larry, is that keep a stop in because of the gap is so far below. Mm-hmm. What happens is this, folks. When you have a high volume high, okay, it will go back and test it. Now, in this case, which is cool, okay, is that the high volume high was out there from June of this year, right?
When the drug was approved by the FDA. Yeah.
Okay, so you had the high volume high. Now, what you did is this: you went from a price point of $13.50, and then you came all the way back to $6.95. Mm-hmm. And what I've found is this: is that you don't know when it's going to get tested, but when it's going in the right direction, meaning you've just gone from $6.95 up to $8.97, it's like, okay, you just got to. It's on its way. That's the bottom line. Okay.
Yeah. I keep stop at about 8.
Yeah, I'd put a stop. I mean, if you're going for 13, I'd put a stop at the 781 or something. Do you know what I mean?
Okay.
Where I'm going with that 781, that was last week's low.
Yeah.
The really cool thing here is that you got another day. If this thing can just close like at 9:20, at 9:30, it'll be beautiful waking up next week. The reason being, folks, is that it hasn't been able to hold that price the last 3 weeks. And if it can hold that price coming into Friday, that would be a good deal. Now, what I'd also do, Larry, right, is put the sell in. The reason being is that this is going to be, it is a highly volatile stock. I mean, this stock can move 50% in 1 week. So if it spikes, what you're going to see is that will be a spike again. Mm-hmm. And if your order's up there, well, you may get hit. You see what I'm saying?
Right.
Yeah.
Okay, I appreciate it. Thank you.
Have a great one, man. Have a safe one.
Bye.
Folks, when you're putting orders in, let's say you're scaling into stocks.
Yes.
That's beautiful.
Yes.
When you have something like that, you want to scale out of it.
Absolutely.
And you want the orders up there, because if the orders are up there, it's a whole different ball game. But I can tell you flat out, if you're day trading anything, you always want orders in.
Yeah.
Always. Okay.
We've in the newsletter, my newsletter, we've got a stock. It's had a really nice run. May even run higher than where initial targets are.
Right.
But we've got 2 different stops in there. I mean, 2 different exits. We've actually got 3 exits. We've got the stop on the downside, and we've got 2 exits on the way up.
Nice.
Yeah, to be able to catch the spike, And if it closes over the swing point, we'll go ahead and get back in then. But otherwise, we're to catch that intraday spike, we're in good shape.
It's totally where it's at.
Yeah,
it's totally where it's at.
And and if you want to, and you can go back to days like the flash crash day,
right?
Okay, May 11th or 7th, May 10th, okay? And folks, that's when you absolutely want to make sure you've got stops in. You got exits. You got both sides of the trades covered.
There's no doubt.
So that you can take advantage of something and you're on the right side of the trade and make sure that you're covered as much as you can.
Machine's out of control.
Yeah, you bet.
In control. Yeah, no, there's no doubt about that.
Yeah.
S&P's out here. We're getting a little juice in this market. The S&P's just went from USZ. I mean, it is. Someone's in there buying them.
Super Mario was just.
That's right. How did I forget that?
Yeah, he's hanging out in the bushes. We just have to always find him. We got to look for him. Where are you hiding?
No doubt. So what you just had with this S&P's, folks, 1443 up to 1451. That's a big move, man. That's. That's particularly a big move because what you're going to get here is, you got under that swing of 1449. It's over it again.
Yeah, could end up just being another sideways day.
Yeah. Hey, well, no. There's enough. I'll take this volatility out here. Let it go back down again. That works. Small caps, man, still can't move.
No, Russell 2000 is certainly has been the weak.
But what did happen is that what I didn't get is that I still didn't get any juice on the way down either. Yeah. I mean, even that sideways move. See, today would be beautiful, man. See, if this could
you get some energy.
Well, listen, this may be the first one that gets below your low.
Last week's low. That's right. That's really critical. Now, in the case of the small caps, that because it is the weakest one out there,
right?
Testing that area is really important. So,
it is.
If it breaks it, that gives you a big, important sign. If it tests it, then that may be the signal, okay.
And the number was the 842, and we hit 847, so it's rejected that at that particular point, because now we're at 850.
Yeah.
If we go and we take a look at that IWM in correlation to it, what you'll see is that the IWM got down to 8461, rejected that level, and it's definitely going to have lighter volume. There's no doubt about that. Well, actually, we got a little volume in here, actually. Look at that. This is going to be interesting because, see, the IWM did 9.5 million.
Yeah.
And we only did, this normally does 30, 40 million. So there'll be a little expansion of volume today.
Yeah. So bonds, what's your take on the 30-year, where that's going, the 10-year, with Uncle Ben, at least being in the market, he says, through the end of the year, but maybe beyond.
Yeah, no, big time.
He's going to have to be beyond.
It's beyond.
He's got to, if he's going to keep rates low through 2015.
Right.
Right. I mean,
right.
Right.
It's going to be
the market take over. He's screwed.
Right. Totally. There's no doubt. What you have is that you have. Once you get back inside 145.26 or 147, it's like, okay, my take would be that, okay, it wants to run up to 148.10.
Yeah.
Now, we get price moving here, but, there's not a lot of juice in this. Do you know what I'm saying? There's no volume behind it. So it's like, it's going to have to build more cars to get up into those higher levels. That's the way it shakes right now in the bond market, Longer term, well, let's go look at that, because if I just do a long-term contract up, and I use the continuous contract.
Yeah.
Yeah, see, if you use the continuous contract, man, I'm telling you, folks, Larry better get his life jacket out. Because this is a classic. This is about as good as you get. If you happen to watch the Tiger TV, I got like a 5-year chart up there.
Yeah.
And it rejected. It rejected those the low levels, and just building another whole level.
Yeah.
So it makes sense. I mean, they're gonna juice this market for. Well, let's picture this. No matter
it makes sense while he's in. He's got the position. Uncle Ben.
Yeah. Well, hey, listen.
And if the whole approach is, hey, we want to get the housing market behind us and solved and so forth, then keeping rates low is the deal.
It's the deal, and it's already the thing that's amazing. That blows my mind that I know it's already moving.
Yeah,
okay?
Well, because you've seen it every single day,
right?
Yeah,
and it's moving very quickly. Now the job part of it is absolutely a huge job part of it, because every piece of real estate can generate so many jobs.
Yeah.
And there's a lot of jobs, man.
Yeah.
So it's going to be the confidence that, okay, people start spending the money. Now that's what's going to... It really comes back to the idea of the people spending the money. You hear the... on the financial press a lot, folks, okay, the uncertainty. If I was on there and they would ask me, I don't think it's the uncertainty, I think it's the fear. The money's there. I know the money's there.
Yeah.
It's the fear of spending it.
Yeah.
So depending what type of risk parameter people are, I can understand it, because people got whacked beyond belief.
Well,
now you and I see, this is where it's always different too about what you're doing. We're risk takers anyway. Like I'll never forget when people saying to me, we were talking about this yesterday, that you know, when you're a day trader, folks, okay, people think that you're the biggest risk taker in the world. Well, the reality is that you can get your cash anytime you want, okay? So I used to always crack up sometimes. I'm saying to myself, I'd watch, you know, some other people's taking, I'm saying to myself, you're taking a much bigger risk than I am. You know? So it's really interesting, and, you know, if you don't take your money, that's a different ball game, okay? But, you know, when you're doing this for a while, you know you need money to make money, so you're taking your money, but...
Yeah. No, there's no question.
Those variances come into play that are insane.
They do, and it's that whole change in psychology.
Yeah, it is.
And when you have the media stuff that's out there, people don't know what to believe, what to trust, what to, you know, and that's why I've just simplified. It's one of the reasons I put together the candlestick, you know, a report, special report. Also, I'm going to be doing a workshop, you know, on candlesticks.
And, good.
And part of the whole reasoning is because you can cut out all that noise.
Which you have to,
You know, and what actually was kind of cool is, you know, I was talking about on my show this morning was, and I put it inside the special report. I got this cool little comic inside the report that shows the both the bull and the bear checking in, punching in before they go to the floor on the New York Stock Exchange. And my whole point was, and it works this way in business, right? Every day you go to business, folks, so are your competitors. Okay? And you know, and the question is, who's going to win today? Because you're all going after the same business. What was the first thing I just said?
Right? You're going to crack up, folks. Because what happened here, I said to Steve, as soon as we came in here this morning, I said, man, I got to find out what's going on in the business right now. Because what had happened, folks, is this. In the last 3 days, I got 3 separate calls from big stations, right? You know, wanting us to go over there. And I said, something's happening in this business right now. So, and specifically, and I'll find out today, you know, because I have to do some research on exactly what it is.
Where's that shift?
Because there's a shift here, and a couple of these places I've been trying to do business with for a while, and all of a sudden they're coming to us. But what that also means is that someone else has decided to move. Okay? And now, this is what the real question is. See, the business that we're in right now, it goes like this. The movement on the net because of devices is accelerating. So that is a business that we want to generate much more. Versus being on radio. So because the difference is there's 8,000 stations, and in order to niche it down to first AM, then financial, then you know, it's just a different ball game. So understanding, you know, what's going on at the same time is as well. And there was just a shift that took place here for sure. You know, not here, but across the country.
And so I take a look at it. You know, you and your competitor, you know, you both punch in, around the same time each day. And
I punch in earlier.
I know you do. And no one punches in as early as I do.
No, they don't. They don't, man. That's right.
And so that's what's so cool about the, you know, because the stock market is the same way. You got a bull and a bear who take a look at the same image and see 2 different things. And always punching in. Now, the cool thing about the stock market that's different than any other business is that you can't hide. The signals are actually left out there for you to actually review. You can see who it is that's got control. And we watch these patterns that complete, and when they complete, and then you've got this sign, you know, it's like when you drive, you know, you naturally, if you see a red light, or, you know, it's kind of yellow and red, you know you're going to have to stop,
slow down, baby.
You're making that decision, but basically, you know, you're going to try not to run a red light, you know, that's danger. And so what's actually different about, because when you're out against a competitor, you don't really see his cards.
No.
Okay? No. But in the stock market and in charting, it's totally right there in front of you. And that's actually the cool thing.
It absolutely
is. It's like knowing the dealer's cards.
No, it's...
And when you know the dealer's cards, how easy is it to play?
You're really in good shape.
Right? Yeah.
No doubt. Folks, you can come over to our website at TFNN, and you're going to see right into breaking news. You're going to see candlesticks, silent signals, the speed of trust. Check it out. Steve Rhodes, Tom O'Brien, all you tigers and tigresses, you stay right there, folks. We're coming right back. We have the Dow down 22, NASDAQ off 11, S&P's up 3. We're going to be right back.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to tfnn.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to tfnn.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Time is the great equalizer of all mankind. Time doesn't care about winners or losers, who succeeds or fails. Time only cares that you played the game. Question: are you playing the money game? Is your money working as hard for you as you are for it? I'm Steve Rhodes, author of Mastering Probability, a daily trading and investment newsletter service, and we're celebrating our 1-year anniversary. In year 1, we generated a 30% profit. Plus, I provided 26 hours of live coaching to my clients. My daily newsletter service is available by 8 a.m. each day and covers the stock, futures, currency, and commodity markets, along with all the current patterns that you can trade. Each newsletter is packed with education, and it's yours for as little as $3 per day. And for the next 30 days, you can try it risk-free. Click on my name, Steve Rhodes, on the homepage of TFNN.com and begin your journey to great wealth today. If you're waiting for a better tomorrow, remember this: today's tomorrow will soon be yesterday, and your clock is ticking. Mastering Probability. Now is your time.
Catch Kate Stalter on the Small Cap Roundup, Tuesdays and Thursdays, 11 a.m. Eastern. Up next on TFNN.
Steve Rhodes, Tom O'Brien, appreciate you growling and prowling out here with us right now. Let's see. Look at that. DAX came all the way back, too, didn't it? My God. So you get the Dow down 23, NASDAQ's off 12, S&Ps are off 4, the DAX is down 60. I got it down 21 right now.
Yeah.
Yeah.
13 points, yeah.
Let's go to Rich in Orlando. Hey, Rich, what's going on?
Morning, guys. How you doing?
Doing great. You having a good day out there?
It's a beautiful day in Orlando.
Beautiful. Well, I'll tell you something. You get a picture of this, folks. Okay, we're in a Class A building. But what happens with this building, this guy, like, he puts these air conditioning on it, and if it's like, right now it's cloudy outside, like Steve and I, we're freezing. Okay, it's warmer outside than it is inside. I'm not kidding, folks. Tomorrow we're going to have coats on. I mean, it's like sick. I mean, it really is. It's like, anyway. What are we going to look at?
Well, I'm looking at the TWM, looking for an entry point. It's like, it's like it's come down, it's going up a little bit. I know, Tom, you're more on the bearish side, and I know Steve seems to be more bullish. What are we looking at here? Is it
the yin and the yang, baby?
I know.
So the TWM is, folks, the pro share 200% inverse correlation. Well, what you have out here, you're at 26.08. I mean, this baby can get down to, 25.67. If it gets down there with lighter volume, I'm just giving you the highs of the low bar over 3 days ago,
Mm-hmm.
I mean, we already own it. Right now, I own it. You know what I mean? So,
So what is your projection on it? If you're in it, what are you looking for?
I'm looking for this big.
You got a high volume top there at 37, but if you got a high volume top,
well, the IWM itself. Okay, let me go over to the IWM for a second. Okay, so the IWM, we come down the first leg right now. Okay, and I need to see, and we're getting it. The volume's not bad today. 10 million is not bad. If it does. The breakout here hit 69 million, but let's picture that does about 40 million. If it does 40 million, I'll be happy. Right? And this is why. Because all it has to do is basically close not at the high, the IWM, which is at its high today, even though it's down, okay? But if this can close at about 84.90, that's going to give me a nice little doji, and it will jump the creek. See, the creek is set up at 84.19. If it jumps that creek, then it's all over. Then it's like, okay, you'll get some real movement downtown. So, and
it's absolutely the weakest of the four, core indexes. So it's the one that if you were going to be short, you want to be short.
Yeah, it's the only one that did not it did not take out its high, and it went over the high, closed underneath it, had lighter volume, did all the deals. What does happen with the small caps, though, I'm sure you know, that can change in 2 seconds. The small caps, folks, it
can be weak sitting in the weeds for a while, and then
boom, it comes out of nowhere. Yeah. You know what I mean? So I still like the aspect, as long as the commodities continue to get hit, which they're getting hit, the small caps will be affected. That's what affects the small caps more dramatic. Well, that's what affects them, period. There's a huge amount of them that are in the commodity business.
And Tom actually, he really pegged the high really well. And if you take a look at the week of May 6, 2011, because that's what it was going against, and this is the IWM, 338 million shares. That was May 6, 2011. The high there was 86.81. And last week, what you did was you got over it, closed underneath it on 210 million shares. And so it was a classic, rejection of swing point on volume.
And do you remember? Price. Now, what it also is, so watch this. Now, this is the first time I've done this out. It's the first time I've actually said it, too, folks, because this is going to get interesting.
Yeah.
What had happened, folks, is that this had also set up. This was the perfect Tiger Godley,
absolutely.
Plus the butterfly. Yeah. The first time we got it, okay? Yes. Well, guess what? I'm thinking it's a complex one, just like the ABC structures.
Okay.
Yeah, isn't that? So, see, it went to the same spot, folks, okay? So it's going to be interesting to see how this shakes out.
Yeah.
Steve Rhodes, Tom O'Brien, you stay right there, folks.
Thank you, guys.
You bet.
Okay, man, have a great one. Have a safe one. We get Kate Stalter coming up next, folks. You stay right there.
Have
a great one.
Bye-bye.